All right. My name is Chris Campbell. I'm a practicing CPA and I work with small businesses and individuals to help them pay the least amount of taxes possible while keeping you out of jail. So today, I wanted to answer a question that was brought up recently about the ability to deduct business taxes. So if I pay taxes for my business, the deductible, can I deduct it against, other tax? Does it lower my actual taxable income? And I think I shed some light on it. And the answer is it depends. I think I've said that answer before on some other questions. But yeah, it truly depends. A couple things that you have to factor in is what kind of tax is it, right? So when you're operating your business, you have all kinds of taxes that you have to pay. Income tax is one piece of it, but there are a number of other taxes. When I get hit with that question, it can be pretty general. You have your federal taxes, your federal income tax, your state income tax. If you are in a state that has income tax, not every state has one. But then you also have on the federal side, you have payroll taxes, usually for both federal and state, and you have sales tax. So, these are the main ones that most businesses will have. And depending upon the industry that you're in, some industries have an additional tax. So, for example, like if you're in trucking, then there's a transportation tax. If you are in alcohol sales or beer sales, I think there's an additional tax for that. Don't quote me to that, but there are a number of different taxes. But I'll go over the big general ones just to give you an idea. So generally, your federal income taxes are not deductible, really, again. And so in short, the answer is no federal taxes. However, state and city taxes are normally deductible. Now, what you have to be wary of or be clear of here is that the taxes that we're referring to are if it's associated with your company. So personal state taxes are not necessarily deductible, but any local or state tax that are associated with the business, those would be deductible on your federal business return. So you have to watch that because many entities, especially in the small business space, are what's called pass-through entities, where the entity itself is not subject to tax. You are as a person. So, for example, you have an LLC, or you operate a partnership, or you're a part of an S corporation. Those entities themselves are not subject to tax. The individual is. So, for example, if you have your LLC and your LLC generates $100,000 taxable income, you have to pay that personally, both on federal and state. The LLC doesn't owe tax. So the taxes that you would pay on that would actually be personal taxes. So in that instance, your personal taxes are not a deduction. Any taxes that you pay personally are not a deduction, even though it was as a result of income from a business activity. Now, where it would be deductible is almost the local taxes. So New York City is a great example of that. So New York City does not recognize the S corporation. So as a result, they also charge, if you're over a certain threshold, an unincorporated business tax. So New York City is one of those places where they don't really let you escape the whole pass-through entity thing, where they actually do want the business to pay the tax. So in that instance, New York City wants you to pay business income tax based upon the income that was generated. So any taxes that you would pay to New York City as a result of your business activity, income tax, that would actually be deductible, or at least on your federal return, not necessarily the state, but on your federal return, you would be able to get a deduction on that. So that is an instance where it would be a deduction for state. But with most pass-through entities, again, your LLCs, your S corps, like those state taxes, you're usually paying that. It's usually deemed a personal tax payment. So that's not applicable as a deduction toward your federal side. Now, within the last few years or so, because of the Trump tax law change and the limitation of a state tax deduction on the personal side, and the limitation of your state tax deduction on your personal returns, now many states, for those that are involved in partnerships and those that are S corporation owners, they've created what's called a pass-through entity tax. And it's a pretty nifty tool because it actually allows partners and partnerships, S corporation owners, to actually pay their state taxes through their company
And as a result, get a deduction and additionally get a deduction for it on your federal return. So without getting too far in the weeds of it, if you are an S corporation owner or you are part of a partnership, doesn't apply to single member LLCs. So if you're an LLC and you're just being taxed as a regular LLC, this would not apply to you. But if you're part of a partnership or you're choosing to be taxed as an S corporation, if you utilize what's called this pass-through entity tax, it allows you to essentially knock out two birds with one stone, where you are paying your personal taxes that you're going to owe to the state, but it allows you to pay those taxes through your company, which as a result allows you to get a deduction for your state taxes paid on your federal tax return. So that is a way that's around it. And it's a relatively recent phenomenon because this was done in response to Trump tax law changes that took place in 2018. So this is a fairly new phenomenon, but it's a great tool because again, it really allows you to knock out two birds in one stone and really exercise that deduction for your state taxes paid. Most of the other taxes, I think I spoke about like payroll tax and sales tax, those are pretty much deductible across the board, whether you're dealing with determining your income tax to pay to the state, as well as reducing your taxable income for both. It allows you to reduce your taxable income for both federal and state. So usually most of those other taxes wind up being deductible, but those that aren't usually fall within, like I said, the federal, your income taxes, which are necessarily not deductible. It's federal income taxes that are really deductible, and state I just went through, it really depends. It's your state and local income tax. So hopefully that was helpful. If you have any more additional questions about this topic or any other tax or account related questions, feel free to reach out. I'm happy to help. That's all for now, and I'll talk to you next.